Hi everyone, hope you're all doing well, and today I'm going to talk about 5 stocks that I bought last week. So I'll go through these companies just to let you know they won't be proper deep dives. If I did do 5 deep dives on this video, the video would end up being about 2 hours long. So to save you, if you don't want the deep dives, you can just go to some other videos on my channel. I probably have a deep dive on all these 5 stocks, and actually this week I actually probably will do a few new deep dives on them, just to kind of keep you all updated on my thoughts on them all. But I'll kind of do a quick scan, why I'm buying them, any kind of new news with them, so we'll take a look. Now if you do want to know when I'm buying or selling companies, make sure you join the Patreon, links in the description. So I post when I'm buying or selling in real time on there, and also there's 2 exclusive videos a week on the Patreon as well. So the first stock I bought was Celsius. So I actually have finally tried this product. I ordered it myself. I had to get it imported from the US. If you're on the Instagram, if you're not on the Instagram, give me a follow. I think it's JKR Investing on the Instagram. But if you were on the Instagram, you'd have seen that I actually got this product. I've been using it for work. So when I've been having it at work, I've definitely felt a bit of a kick after I've had it. And funny enough, I actually gave it. Someone at work was saying to me, there was about 2 hours left in the day, and they're like, "Oh, I'm absolutely knackered. I don't think I can make it through these 2 hours." I was like, "I've got something for you." So I got him one of my Celsius, gave him one of them, and he said he was absolutely buzzing for the rest of the day. So it's not just me. Someone else at work, I actually gave them this product, and they were absolutely buzzing as well. So I can tell you they are pretty good products. That's the big thing, you know, when I do like invest into companies, I do really kind of like enjoy using the products. So I have a bit of an experience with them, and I like having a good understanding of them. And I've got to say, you know, I'm not much of a Red Bull drinker. I don't mind a Monster now and then. Monster I don't mind too much. I can have a Monster now and then, but Celsius is definitely something that I do. Without that sugar taste, I do kind of prefer it. So yeah, I can see why the Celsius is really popular, and you know what, I would really love to try a few more products. So the more they get to the UK, I'll be really happy. So I did buy a bit more Celsius. The big thing I'm going to say about Celsius is that I say this every time. A lot of these stocks that I'm buying now, I always say are massively undervalued. Celsius is actually one of those stocks that I'm buying that I could easily see this falling a lot more. I could easily see this going to like a $40 stock. So that's the big thing I always say about this one, is that I am starting a position in Celsius, and I am aware that I am basically paying an okay valuation for this. I am nowhere paying a fair valuation for this. You know, this still has potential to go down. Now you might be saying, why am I then buying it when it's only down a little bit, or why am I buying it when it's okay valued and not undervalued? Well, first of all, I don't want to time the market. You know, that's a big thing. When I'm a long-term investor, I can afford to take 10, 20%, 30% dips on companies. For me, I'm more looking at where it's going to be in 2 to 5 years. And in 2 to 5 years, when I'm probably up on most of these stocks 100+%, as I have been previously, then that 20-30% isn't a big deal, because when you're up 100%, a 10, 20, 30% difference doesn't make too much damage. And overall, the big thing as well is if it does go down, all I do is average down, and I can make more money as well. And just to put that onto like a price sales perspective, you can see here that it's still pretty rich on the price to sales ratio, especially for a drinks company. As you can see, the big thing is that it's fallen down a huge amount. It's nearly lost half its value, and that was the reason why I was like, okay, now I'm going to take a punt into this one. And the big thing as well is like I've been looking at this one for a while, but the problem is like every time it does take a bit of a dip, 20-30%, people realize how good of a company it is, and they come in and buy the dip. So I'm looking at this one going, every other time this company has these sort of like little dips here, 30%. Eventually people come in and actually start buying the company on these dips. So I thought, you know what, I'm just going to commit and buy it. If I don't get a fully built position, I still got an okay position. And if it does go to $40, I build a full position, and I'm laughing, and I have a good company in my portfolio. It's currently 4.7 billion. It does have a P ratio of 549. Now that does look incredibly high. The only reason why is because it's just turned profit. So when you say 549p, you're like, oh, that's really high. But obviously at some point, a company that doesn't make profit has to turn profit. When it does just turn profit, it does look incredibly high. The big thing is to say here that this is a company that is now making profit, which it didn't used to do. That means it probably won't have to raise that much debt, and what will happen is it will start increasing that profit more and more. So I wouldn't judge the PE ratio on this company. I would just say that it is now making profit, which is a good thing. And this is the company website in case you haven't seen it. These are all the flavors they do have, and yeah, it's doing very well. I think it's outselling Red Bull. It's second now on Amazon to Monster, and yeah, I can see this having a lot of potential going forward. Originally, I wasn't a huge fan of actually the branding of it, but the branding is actually really starting to grow on me right now. As well as having a lot of drinks, they're also expanding now into the snack range as well, which is really positive. Now, this is why I'm picking on this company. Just look at the growth this company has. I mean, look at the revenue that it used to do. It's always pretty much been historically making decent amounts of profit, so that's always a good thing. And look at the revenue growth. I mean, just from this year, we've gone from 130 million to 299 million in revenue, which is insane growth. Even the profits moving in the right direction as well, and that's with a physical product. You know, how many times have you seen physical products have, you know, supply constraints, shipping increases? So this has been very good considering all that. And the big thing is next year, I think few people are kind of considering that they're going to probably triple that profit. We'll see, because obviously have the logistic problems. They're building a lot of new factories, so I could see the profit not being what analysts are expecting. It's always very hard with a lot of these high growth companies to get the correct amount of profit. But you can see here that analysts are expecting that revenue to increase a massive amount to 488 million. So basically nearly 500 million in revenue next year. Now, if they do 500 million in revenue next year, that will put us round to about a price to sales ratio of 9, which is fantastic for a company growing at this sort of rate that's profitable as well. And financial health wise, it's got no debt on the balance sheet at all. It's got decent amount of cash. It would be good if it just had a little bit more cash, so I could see them maybe doing a little share offering at some point, you know, if they could get that cash up slightly. But it does have no debt. It is profitable, which is a good thing. So I don't know, it's probably up in Celsius hands if they do that. But yeah, overall, you know, you've got a fantastic growing company. You've got a balance sheet that's really amazing, a company that's executing very well. The valuation is half of what it used to be, and like I said, I think the products, I've tried the products myself now, and I think they're very good products, and I'd really love to try a lot more of these, because the ones that I've been trying at the moment were like the powder ones, so I think I'd really love to try a lot of these ones here as well. So yeah, I can see why the sales are so strong, because it's really good. So yeah, I did pick up more Celsius, and like I said, I'm being careful because I do think it could come back even more to like $40-ish, but even if it doesn't, I've kind of got a nice little position built up in this one anyway. Now, next up is Alibaba. So I bought some Alibaba shares for the first time for quite a few weeks. Last week was a bit more of a week of buying my stocks I haven't added into for a while. As you probably see, there was I think when I get towards the back end, you'll see two regulars that always pop up, but I did end up picking a bit more Alibaba up. So I mean, this is now at a point of view where you can't argue that Alibaba is undervalued. You cannot argue. You can argue whether or not it is a bit more of a risky investment, 100% agree, but when you stare at the company and the financials and the valuation it's at, there is no one in the world that can say this is not undervalued right now. Now, like I said, it comes down to you personally as an investor, whether you want to take the risk, whether you think there's a bit more risk with Alibaba, which we'll talk about in a second, and a lot of the worries about the Chinese companies. But if you stare at this company, if you take the name Alibaba away, and you didn't know who this was, the financials and the valuation are just extremely cheap. It's currently trading down at 17 price to earnings. Now, for a company that grows what Alibaba does, which is normally around about 30%, and has the moat of Alibaba, you don't normally get these companies at these sort of valuations. You know, you only have to look at the likes of, say, an Amazon, and I think that's like 60 times earnings. So that says a lot of where it is right now. And just look at the share price drop, guys. Look at it. I mean, $122. I mean, I remember when Chinese stocks crashed in 2018, and I was picking up Alibaba, you know, $170, $160. I was like, wow, this is absolutely bonkers. Now, if someone told me in 3 years' time what would happen is it would actually then go even lower than that, and in that time it will grow revenue. I think since then revenue's pretty much doubled. I think profit is up a fair amount, and it's even lower. It's crazy. It's crazy. Now look at the share price here. Let's just go back to see how long ago it was down at $122. Here we go. The 2nd of June 2017. The last time it was $122. That's absolutely crazy. It's absolutely crazy. I mean, when did it IPO? 2014. So it IPO'd in 2014 at $93. Yeah, it's crazy. Now, if we have a look at the future health, now if we go back to, let's go to 2017 and see what revenue they were doing. So back in 2017, they were doing 143 billion. Now they're doing 814 billion, so that's a bit of an increase. Profit isn't up as much. The profit is so they did 38 million. Oh, that's wrong year. 2017, 43 billion, and now they're doing 124 billion. So the profit hasn't increased as much as the revenue, but that's probably because Alibaba do like reinvesting into the company, and that's why they keep up so much growth, which isn't a terrible thing. So yeah, they've increased the revenue a huge amount. The profit still moved in the right direction, and look at the future growth here. You know, we're still going to have fantastic future growth, which is what you want. You know, for a company to keep going up in value, you need to have revenue growth, you need to have profit growth going forward. If we just have a look at the financial health here, very good balance sheet. You know, 13% debt to equity, which is really healthy. So you got a company here with a strong balance sheet. The moat of what they do is fantastic. The growth is really, really good. And obviously, as you look at the share price here, you know, you could look at the share price and think there hasn't been much growth in the last kind of 4 years. You know, if you look at that point of view, it's absolutely crazy. And in that time, you look at the growth and the revenue and the profit and the valuation at 17 times earnings. The lowest it's ever been. It's crazy. So, you know, the growth is fantastic, and the valuation is fantastic on this one. Now, the only thing is why people are a bit nervous on it is just the Chinese risk. And the big thing that's now pushing Chinese stocks down is because of DD. Now, a lot of people saying, well, if DD's been delisted, will Alibaba be delisted? I don't think Alibaba will be delisted. You know, the thing is like, China want Alibaba to be a very successful company, and they'll always kind of slap them on the wrist and show who's boss. But to delist them would be a massive thing, and that would really hurt the trust in Chinese companies and investing into Chinese companies, and obviously the company itself. So I don't think it is in the best interest to kind of delist Alibaba for them. You know, they still want them to be successful, but I think they'll always try and just keep them in line a little bit. The thing is with DD that people forget is that you got to remember China said do not list on the US stock exchange. And what did they do? They didn't listen, and then they listed. So for me, this is just, you know, this is DD's fault. This isn't anything to do with Alibaba. This isn't Chinese government being I'm trying to find a suitable word that won't get demonetized, just being, you know, awkward about it. It's just that they said don't list, and they listed, and obviously that would make China look quite weak, and I think they were in the right to kind of say, right, you're getting off that stock exchange. So yeah, I think that this is, people are kind of saying that now the delisting companies, is it going to be Alibaba? But for me, they won't delist Alibaba, and I think that the one with DD was deserved because they didn't listen. So yeah, I think that Alibaba in the long term, I'm a believer in it, and I think right now it's at really good prices. Next up, TDOC. I've not bought this one for a while, and I did. The reason why is because it's in the $90 range now, and it took me by surprise. I wasn't really looking. I was kind of very busy buying HIMS a lot recently, and I saw TDOC, you know, the first mover advantage, the market leader, telehealth. You can't tell me that telehealth in the next 10 years is going to be smaller than where it is right now. It's going to be massive. You know, there's a lot of problems with the healthcare sector, and one of the big things that's going to solve that is telehealth. And as well as that, you know, it's just it's the ease of use, you know, to be able to get onto a doctor without having to travel, with just picking up your phone. It's going to be massive in the next few years, without doubt. And you asked me if TDOC or telehealth as well, the whole industry is going to be smaller in the next 10 years. I think it's just going to be huge. And I think the big thing as well is so much demand's being brought forward because of what's happened in the last 2 years. Now you look at the share price here. TDOC was a steady company really before the CV situation. Now if we do go to the CV situation, which was probably about March time, there was a little bit of rally into it though. So I mean, if we go, let's just go back to see where the share price was last at $92. So we go here. So the share price hasn't been $92 since the January the 10th of 2020. So in that time, there's been all the share price gain from TDOC totally wiped out on this. And that's when I'm thinking, okay, we've got a little bit of a discount here. You know, without doubt, TDOC has, you know, telehealth has come a lot more mainstream. There's more users that are going to be staying with TeleDoc now for the rest of their life using the product. So for me, a lot of the benefit with TDOC will, you know, obviously it did get to a bit crazy valuations, 100%. But the problem is now is that, you know, what they've gained out of the CV situation will benefit TDOC for the rest of their company's life now. And that's the big thing, you know. And now we have TDOC back at the CV prices. I think that's an absolute steal. Now, one thing that I see people use quite a bit against TDOC is that, yeah, sure, if you look at the share price point of view, you know, if you think you get in this company that's benefited so much from the CV situation back at the same prices, then it's an absolute steal. But a couple of people that are negative on it, what they do is they say, oh, but if you actually look at the shares outstanding have increased an absolutely huge amount. Now, that's actually true. The shares that are outstanding have increased a fair chunk. You know, the shares that are outstanding have increased quite a fair chunk. But the shares that are outstanding have not increased as much as the benefit that this has had from TDOC. You know, you can see here there has been, you know, the shares outstanding has increased a huge amount. You know, the shares outstanding has nearly doubled. But the thing you got to also remember is that TDOC has gone from, okay, look at this here, right? So if we look at TDOC, if we go to the start of December 2019, TDOC was doing 553 million. Okay, what they're going to do in revenue right now? Okay, in the revenue right now, they're about to do 2 billion in revenue. So the company has quadrupled the revenue. So even though the shares outstanding has increased, it has nowhere gone from the benefit of what the revenue input has been and the benefit the company will have going forward because of the CV situation and people using telehealth more and more. And the big thing is, you got to remember, what is the big increase for this? Well, the big increase for this is that they bought a company. So you got to remember that one big thing, I don't know what it is recently, but people have started to get massive on shares outstanding. And it is something that you do need to look at, but it's also understanding what they are doing that for. Now, if you understand that they bought Livongo is a massive company that helps complete TeleDoc, that is a product that will bring revenue in for years to come. You've got to understand that shares outstanding, if they increase shares outstanding to buy Livongo, that is a massive benefit for the company. And what that's going to do is it's going to be driving revenue going forward, and revenue will carry on increasing because of that Livongo deal. So even though it's seen as being a bit negative right now, yeah, it might be a little bit of a negative, but it's nowhere near what the positives that deal has brought in. And that's something that is always looked at. And also on a debt to equity ratio, very clean on the balance sheet as well. So yeah, I did buy a little bit more TDOC at $90. I think this is a really, really good price for this company. So, you know, I can only see, you know, in this going forward, I only see TeleDoc being a 100 billion plus market cap company. You know, basically the Netflix, like Netflix dominates video streaming, I can see TeleDoc dominating a lot of the health industry going forward. I can only see TDOC being a 100 billion plus company by the end of this decade. So yeah, I'm buying, and it's one that I probably should have bought a bit more of, to be honest with you. So I really do need to focus on this one a little bit more. Next up, DraftKings. So I'm not going to spend too much more time on DraftKings because I have about a million videos on this one at the moment. But yeah, I did buy a little bit more DraftKings. Same again, I look at this one. It's lost basically half its value within a 3-month period. That's just, you know, there's no news out there to justify DraftKings losing half its value, and that's obviously a big scream to me that this is just a massive overreaction on that share price. So yeah, I'm buying that one. I won't go too much into why I'm bullish on it. Just to let you know, there's this video out here, which was the future of DraftKings with Jason Robbins, who's the CEO. Very good interview. It's 41 minutes long. If you shareholder, worth a watch. So shout out to Joe who did this. Never heard of him before, but it was a good interview. So yeah, go check that one out. And once again, you know, the growth on this one, you know, it's growing double the growth of revenue. People will argue about the amount of money they burn through, but that's just marketing costs. They will come down, and it has the path to profitability because states that do mature after 2-3 years turn profitable. So I don't worry about that too much. And at the end of the day, it's still got an amazing balance sheet with $2 billion in cash. And the last stock that I bought, the fifth stock that I bought, once again, I won't spend too long on this one because I've covered it so much on the channel already, which is, I literally put a full video out last week talking about this, which was a really good video, which is Hims and Hers. I did buy a bit more Hims and Hers. Just to let you know, there was also another really good interview out on Hims and Hers, which was this one here, which was with Andrew Dunham, the CEO and the founder. Really good watch, so do check that one out. Basically, they were saying that this is really, really impressive. You know, what the company valuation is at and what they've done since being founded in 2017 is amazing. And yeah, it's exactly why I'm buying into the company. So shout out to these guys, because this one was a really good interview as well. And this is just, once again, a company growing at a massive amount of rate, really good financial health. So I did pick up some more of this one when I can. So those are the 5 stocks that I bought last week. Hope the video was useful. If it was, hit the like button. I'll try to do a few deep dives on a few companies as well this week. I'm thinking of maybe doing another one on Boohoo, maybe one on Beyond Meat, maybe one on TDOC. I don't know if there's any ones that in particular that you guys want to see. Just put them down in the comments. I might do a poll on the YouTube or something. But yeah, those are the 5 stocks I bought. Let me know what you've been buying, and I'll see you next video.